Hi there, traders. This is Brad Goodwin with the FX Market Insight for Monday, the 14th of October. All right, now, as we just have a look at the MyFX Trading Hub page, we're right in the middle of the Asian session here. Now, there's some interesting things happening over the weekend. If we just have a quick look at what the market's doing. So, market conditions at the moment, well, market conditions are pretty good. There's no major fluctuations, but we do have the US, Canadian and yen holidays, Columbus Day in the States. So it's going to be a really quiet 24 hours, you would think, with no major fundamentals and most of the markets out. But we do have these core market drivers and they are big time in play. Big chance for a deal on Brexit. Trump impeachment news continues to build and we're starting to get some positive feedback on the Chinese-US trade issue. Now, if I just give you a look at it's always good to have a good look through the news pages, see what's been happening over the weekend. So you've got dollar holds near a 2.5-month yen high on US-China partial deal. So dollar yen's rallied. And the rest of it, well, there's just, this Syrian issue, which is another Trump fiasco. You've got the Biden issue playing into that impeachment rule as well. So, but the positive news is, there's a chance of a deal with China. So gold's fallen back a bit, about $4 or $5 on the optimism for global growth to sort of really kick in. Asian shares are up as well. So when you come back and you look at the currencies in general, if I just bring you back to sort of the main sort of dollar page and equities page, you'll see that we're going to see a bit of a surge here in equities because of the euphoria over a potential deal with China and the US. That's one of the main things. Obviously, the Trump impeachment stuff will continue, but also Brexit. There's a chance of a deal here, and that could, it's already seen sterling rally well over 400 points, almost 500 points in the last couple of days. So that's pretty positive. You see this move down here in dollar one, chance of a deal. Price action is not easy, right? This thing's been bouncing around from 709 to 706, like a 350 point range just today. That's a little bit hard to pick. We did have the China trade balance data, right? This is where that sort of why the currency was all over the place. Real fall off in exports and imports, right? So tell you what, it looks like China isn't spending a hell of a lot, and that's starting to really hit home. So you can see why the Chinese want to get some sort of deal done. Let's just have a look at the major currency pairs as we go into the start of trading for this week. Now, this is where it gets a little bit tricky, right? Because you've got a number of different things impacting. What we're talking about, domestic, like Australia Australia, Aussie and Kiwi, I should say, had that little positive spike, a little bit of positive euphoria, a bit of weakness in the US dollar. Now, the chance of a deal with China, that should be really positive. But if anything, these things have just dribbled off. The safe haven play on the whole global growth thing breaking down, looks like it's been pretty much unwound with dollar yen sitting up here at 108.30 now. Euro, bit of positive euphoria, bit of weakness in the US dollar, running with this big move in sterling on the back of Brexit or potential deal on Brexit. So it's above recent resistance lines, and that's, we've seen a bit of this move here to me is a stop loss run. I don't think we're going to see a lot more topside in the euro unless the dollar really craps out, but it's in a bit of a weird situation. Dollar CAD, really strong employment numbers on Friday. We saw a drop from sort of 132.90 down to 131 sort of 70, sitting around 132.11. Now, this is a bit of a short-term move, but a real clean out to the downside there on Friday. So big moves, right? You look at the board across the board here, right? You got this massive move here in sterling, pretty significant move, 100 point plus in dollar CAD. We haven't been seeing a lot of these recently. So you come back to the overall analysis and sort of piece it together. And that's what we're trying to do on the MyFX Trading Hub page. So if I just bring you back here, now you look at the across the board, this move down on the dollar, right? The dollar index, okay, it's just moved down on through the hourlies, but overall it's still sort of moving a bit higher, and we're starting to see this disparity uniformity across the moves. Okay, usually if you see the dollar going down, it's going down against everything, but it's not. This is a safe haven trade. It's nothing to do with the dollar or the dollar move. Dollar CAD, well, it was down on the back of the Canadian data, domestic data. Dollar Swiss isn't doing anything. That's a pretty good indication to me that there's not much going on with the dollar. Dollar Swiss Swiss is neutral, right? So if you want to see what's happening in the dollar, it's either the dollar index or dollar Swiss. This to me is telling me not much is happening, but things are happening with the other pairs. Obviously, a short squeeze there in euro. Sterling, this is causing probably euro to go up. And it's broken both hourly and daily technical levels, this big move in sterling. The chance of a Brexit deal over the next 2 weeks is starting to look possible, and that could be a really positive outcome for Europe and obviously also the UK. Aussie and sterling, the two antipodeans down the bottom here, looks like they don't know what to do, right? The dollar's coming off a bit, but there's a bit of positive euphoria with the Chinese deal situation. At this point in time, I can't really say whether these things are going up or down. They're just trading sideways in a bigger range, and that makes it a little bit tricky. So to start with, right, even dollar CAD with those really strong Canadian numbers, overall, medium term and long term, they are just trading sideways still. So we need a bit more information there. Now, obviously with the US and Canadian holidays, we're not going to see that today. Okay, we're going to wait till the markets really switch on Tuesday. But coming into Monday, keep an eye on those German industrial production numbers. Well worth a look. Then you come into Tuesday, we're starting to get into a bit more beefy releases. We've got the RBA minutes. This will tell us a bit more how concerned the RBA is about global growth, whether they are looking to cut rates further or not. Bit of a left field event. You see Kuroda speaking a lot. Rarely does it move anything. And I think with everything going on geopolitically, I don't think it's going to be an event. So don't get too caught up in that, but just understand that is a potentially massive event. Chinese CPI, I think following the trade balance numbers, it's going to be really interesting to see what happens here. Now, weaker numbers, does that work good or bad for the Aussie and Kiwi? I tell you what, with today's move, it's a bit hard to tell. Then you come into the UK, we've got the climate count change, the employment numbers, obviously the average earnings index. That's going to be a key with Carney following up at the same time with a speech. And then you've got some German zoo numbers after that. And at the very end of the day, Kiwi CPI numbers. Right. So then, I mean, this is where it gets busy. We've got a pretty chunky week as far as numbers go. UK CPI, like Wednesday, well, you know what? Brexit's going to drive that. So I don't know if that's going to play. If it comes out strong, well, then it probably supports a move to the top side. But the final CPI numbers out of the Eurozone, well worth having a look at. Of course, any US numbers at this stage are going to be important. Now, this is where I think one of the better numbers is the Canadian CPI data, right? We've just had the employment numbers, really strong numbers. If this CPI is strong, the market's going to start factoring in some sort of hawkish sentiment or, a hiking bias from the Bank of Canada. So that's going to be that 1-2 connection that we're looking for in dollar CAD. Stronger numbers, to me, it keeps going down. If we get really weak numbers, well, then we'll see that whole move on that employment numbers corrected on that. So that's actually, to me, one of the better opportunities this week. And then you come down, obviously, the assistant governor speaking for the RBA and the employment numbers. The employment numbers, the number one thing that the RBA has been focusing on in their policy decisions. Weaker numbers, the market will factor in rate cuts, and that's going to push the Aussie down. And then we come down, as I said, this is a pretty beefy week. Then you've got some retail sales figures here out of the UK. Once again, probably on the sidelines while we head towards Brexit. These manufacturing sales, it's just a great follow-up from the CPI numbers. It's a very aggressive number for Canada, and that could be, so we've got the employment, we've had those strong, up to the CPI and these manufacturing numbers to really get a consistent move either down or a correction back to the top side on dollar CAD. And then you've got the Philly Fed Manufacturing Index, and we're ending the week with Chinese GDP numbers. So all in all, there's a lot to come out. Now, what you need to do is really sort of have a good look through, see what your time that you can spend in front of the screens as far as doing your analysis and what works in with your trade plan, where the best opportunities are going to come up. You don't chase them all. Well, I don't anyway. the fact is that it's a holiday here Monday. That just to me takes out Monday altogether. I like to see all markets reconnect before I jump back in. Then you come back in, having a look at the key central bank stuff. Of course, when you are looking at the numbers, the best numbers for me that the central banks look at are CPI numbers. Now, of course, we're not worried about the People's Bank of China, but CPI numbers are important. Kiwi, we've got the UK, and also the Canadian CPI numbers. Right, these are your number one numbers that you got to focus. And I guess I should include the final CPI numbers out of the Eurozone. They are really good numbers to really keep an eye on. The rest of the data, well, see if it fits in with what's actually happening at the moment. And the fact is that the RBA have really emphasised employment as the number one thing they're looking at. That's got to be a key play as well. All right, so that's what we've got. Loads of data in between. Not a lot, as I said today. And you know what? With all these geopolitical events swinging in, to me, this is a really mixed, confused bag. When you've got the dollar pairs going up and down, you're like, what's happening, right? Unless you know about the geopolitical events and what various impacts they have, you won't understand why the dollar is doing different things to different pairs, right? And that's one of the skills, I guess, of knowing how these markets work. All right, guys, that's it from me. Not a hell of a lot to get jumping up and down about, but lots of potential, especially as we head towards the last couple of weeks of Brexit. It doesn't seem like there's going to be a pushback in the date, so that's a good thing. Also, these China-US trade talks, it's a positive outcome. Okay, they've agreed to a few things. They've got to put pen to paper, but on the outcome, we could see some sort of resolution there. All right, guys, that's it from me. Have a good trade week, and we'll see you tomorrow. Cheerio.